Hello, welcome back, guys. What is happening right now with Upstart is absolutely amazing. The company had its earnings report and it was pretty abysmal, I should say. And we were talking about it in our Discord channel. In case you're not a member, you are more than welcome to join us. I mean, it's totally free and you can find links in the description box below this video. But the thing is, we were talking about it and at some point the stock was down like minus 20%. And then all of a sudden it started growing higher and higher and higher. And right now, as you can see here on StockTwits, it's up 2%. Now it's 0%. 2 minutes ago, it was up 5%. So now it's going back down again. But the earnings report was actually pretty bad. And again, from minus 20%, it is actually in the green right now. Comes to show you that the stock market is completely unexpected how it's going to be reacting in the next minute or so. You can never really know. So regardless of what is happening, a stock could go down, could go up, and you have no idea why that happened. And this is exactly what is happening right now. And Upstart is a fair example. Now, I have talked about Upstart. And it is a company that I would love to hold at some point, but as I've mentioned in my previous videos, the time is not correct, it's not right now. The reason for this is that this is obviously a lending platform, and it will flourish when the interest rates are actually low. So the lower the interest rates are, the more loans are going to be happening, and so the company is going to be making more money. This is why Upstart would be a company that I would like to buy as it's going lower in terms of price. And at some point today, actually, maybe 30 minutes ago, it was actually at $25. Again, remember, it was down 20% 30 minutes ago. And the thing is, I want to be buying this one at a much lower price so that I can reap the rewards, reap the benefits when the time comes. And that time will be more than likely when rates are going to be going down again, which means that money is going to be becoming cheaper at some point. So for now, I'm going to be on the sidelines just watching for what is happening right now with Upstart. But it's extremely weird what is happening right now. And we will examine the details of what happened here, the announcement. Now, I don't really have a full-blown article right now, like a CNBC article, for example, that kind of compares with the expected analyst earnings estimates. But I will just tell you what happened. We still have some idea here of what was expected and what actually happened, and it's pretty bad. Now, total revenue was 228 million, which was an increase of 18%. Total fee revenue was 258 million, an increase of 38% year over year, which is good. But the transaction volume you will see here was up 12%, which is also good, although the conversion on rate requests was 13%, which is down from 24% in the same quarter last year. Now, interestingly, the income from or loss from operations was a loss of 32 million this quarter, down from 36.3 million the prior year. That's a significant loss here, a significant difference. And net income or loss basically was a loss of 30 million here, down from 37.3 million of a gain in the second quarter of 2021. So as you can understand, this is pretty horrible compared to what happened in the previous quarter, obviously. So the contribution profit was 121 million here, almost up 25% year over year, and with a contribution margin of 47% compared to 42% a contribution margin in the same quarter of the prior year. Adjusted EBITDA was 5.5 million, down from 59.5, a significant difference again, as you will see. And Upstart also repurchased some common stock, which is generally speaking a good thing to see, but as you can understand, the fact that they actually did much worse in terms of how much money they made should have an effect on the stock. But again, if you take a look at what is happening right now, the company is basically flat. Again, it was 5% when I started this video, and now it's back to zero. Now, I don't have a clue what's going to be happening tomorrow, but what I do want to kind of quickly showcase here is what I would like to buy the company for, because we have talked about it and the company has been having some nice ratios here as it's going down in price, although today it was actually a 9% increase, but overall it has been going down. You will see here tremendously down compared to what it used to be, like $400 at some point. And is it still a buy? Obviously, this is a high growth company. It's a lending platform that could be doing well in the future, but we do want to be buying it at a fair price, at a cheap price if possible. So what would that price be? Let's take a look at our stock evaluation tool. And over here, we could be using the revenue growth that the company has, but we cannot go that high. Generally speaking, we want to go with something much, much lower. So still we're going to go high, but lower than what they are doing. So we're still going to go very, very high here because the company seems to be growing nicely through the years. But we're gonna go 20, 30 and 40%, see what we get out of this. Maybe we can go even more conservative later. Now in terms of net income margin, lately the company has been doing 16%, 2% in 2020 though, so we're gonna go somewhere in between and see what we get out of these results. 10, let's just go 10, 13 and 16 here and see what we get out of this. The free cash flow margins, the company has been making some free cash flow. Basically, overall, the margins have been 113 here, 168, negative in the previous years because some years the company was negative in net income. So we're gonna go again somewhere in between 100, maybe 90, 100 and 110 would make some sense. Annual return of 13% is what we want to achieve. Let's hit calculate, and you will see that with this kind of calculations, with a 20% revenue growth, we would want the stock to be at $27 in order to be buying it. Now, remember I told you the fact that this company is all about loans and debt pretty much. And when this happens, we want to be actually participating in an environment where interest rates are as low as possible, because that drives people to getting more loans. And this is what we want to be achieving if we're a lending platform, obviously. And the way to do that is basically by buying the stock at a cheaper price, waiting for it to go down if we're in an environment where interest rates are going higher, as it's happening right now. And so if we're actually having a revenue growth of, let's just say 8% here, we go very, very conservative, we're expecting that the company will decline in the next few quarters, then we should be getting it at in about $17 range. And frankly speaking, I would want to be buying this company near $15 to tell you the truth, because again, I do recognize the fact that we are potentially in for some hike in terms of interest rates. And even though we're looking at a weird picture right now where, yeah, you'll see that the company stock price is going up and down. Take a look at this new Upstart post here. Since I started this video 5 minutes ago almost, there have been 200 posts here in stock tweets. So lots of activity. This is going up and down quite significantly. It's a trendy stock and a trending stock. And so you will be noticing that because this company has a low float as well, you will see here the outstanding shares count is to 83 million, meaning that not too many shares are traded right now. And so this means that the company's stock price movements are going to be very pronounced. So it will be going up and down quite significantly, quite a lot, with news that are basically getting generated every day. And so you should be careful of the fact that this is a trade that could be going up and down quite significantly. And if I refresh our tool here, our stock analysis tool, you will see that this changes all the time. And you're going to be noticing these kinds of changes with this company for sure, and other companies of this sort as well. But we do want to be staying vigilant. We want to be staying careful here, and we want to be buying this company at a cheap price. And as I mentioned earlier, I probably want to be buying this at a less than $15 range, basically $13 to $15 range, to tell you the truth. Probably even less than $13 is where I would aim for this purchase for myself. Now this may never happen. This could keep going up and people could keep buying this, but I don't want to be participating because I think this may actually turn out to be a loss for me if I actually buy this right now. Or I may not make as much money as I would want to be making out of this. So I would just not participate right now and just stay on the sidelines and just wait and see how this is gonna be doing in the next few sessions, in the next few trading sessions. Again, it's not at a bad valuation right now, but remember, this has been massively diluting shareholders. We have talked about this stock, and it is a risky company. It is not a company that has no risk or has low risk. It is a company that has quite some risk here. And as you can understand, it's going to be a prime stock for traders to trade. and so you want to be super careful about holding this one for the long term. And if you are intending to do so, which I do, I want to be buying this at a very cheap price and nowhere near where it is right now. More than 50% down is when I would like it to be. And if that doesn't happen, that's okay. I'm gonna move on to the next one. But thank you for watching this video. I'll let you know. I will create more videos about Upstart if anything new comes up. But please remember to leave a like and subscribe if you're not a subscriber already. And remember, you can always become a patron and get access to this tool, in which you can analyze everything we have talked about here. You can actually do it yourselves with any stock, really. And thanks for watching again. I'll see you soon. Bye bye.